Hi, everyone. I'm James Garbutt,
And I'm Denny Dumas.
and this is the Garbutt Dumas Real Estate Podcast.
Strata insurance. This is a fun topic. This is the big real estate topic of the last few months.
Define fun.
Well, I'm pretty pumped, to be honest.
Yeah, well, you know what? It is interesting. Definitely changing the industry a little bit. We'll
You
see.
know what? The reason that I'm smiling and I'm kind of excited to talk about it, a lot of people in our industry don't really understand how to answer questions yet, even though it's been talked about for the last few months. So in doing some research, in watching some videos, in listening to some podcasts, we've educated ourselves on how to answer those questions for buyers and what to look for when buyers are purchasing into Strata and what potentially could change for sellers in the next few months as well as their Strata insurance gets renewed.
Absolutely. And just to revalidate, this particular episode is about condo insurance, Strata insurance, and we're going to try to answer it from a perspective of if you're affected by it as a homeowner and as a realtor, how to talk about this to future clients. So, it's in doing the little bit of research that I've done, it makes sense that there's time for an insurance change. It's just a pretty drastic one. Yeah. So let's roll right into it.
Think of it from a business standpoint, it makes sense that things are adjusting on the insurance side. Like for you, Jamie, if you sold beer and cider lost money, beer made a lot of money, would you continue selling cider?
Only if a lot of the cider players got out of the game and I could charge an extra 200% for my cider. It increased my minimum deductible, which would be my single price, I guess. No, yeah, you're absolutely right. If it's not making money, I would get out of the game. And from my understanding, what's happened here is a lot of insurance companies weren't making money. So a lot of them exited the game, and that left a very few remaining. And when there's less suppliers and there's lack of profits, that's where the jump in prices came. And it seems logical to me. Aside from the fact that they weren't making money, a lot of people clearly exited for that reason, and it left three remaining companies behind. When I look at the types of buildings that they're insuring, the quality of construction, the way that stratas operate when they try to save pennies by not updating their pipes sometimes, or the cheapest bidder getting the contract, and maybe them, certain strata buildings choosing a more economical route that's short-term thinking as opposed to the long-term decision. There's bound to be a lot of incidents. There's bound to be more claims. And when that happens, they want to have the insurance company cover it, when in a lot of cases it's just strata's not maintaining their building properly or to a standard that would be more long term. Yeah.
Totally.
Yeah. Anyway.
Okay. There's a few questions we want to answer, which will help all of you guys, if you're realtors out there, explain or answer these questions with clients. So one is why is the change happening? And Jamie kind of answered it there, but the other parts of it are the number of claims in the last few years, according to insurance companies. I don't have any real data on this, but this is what I've heard. The number of claims has increased, as well as the construction cost to remediate, to restore the units that are affected by these claims. The construction cost has increased as well.
Yeah, and also they're, from my understanding, they're also looking forward. So it's not just about what the construction cost is today. They're looking at the trends on construction costs getting more expensive over time, and a lot of these buildings getting worse over time. So aside from what the equation is today, from my understanding, these insurance companies are anticipating that it will be worse in the future, and so hence a big hike today.
The one in this area, why the change is happening, the one thing I haven't really heard an answer to is why such a big change this year rather than a gradual increase in premiums over the last few years continuing moving forward. That's one thing that I haven't really heard answered.
I think we're all going to be in the dark to that answer, but my hope is over the coming years, if this hike, it's a big jump in a short period of time, which is possible when there's only three players in the game. But my hope is that this will amount to potentially excessive profits for these insurance companies, and more players will come into the game and then maybe we'll see some adjustments down the road. Call me optimistic. Time will tell. But if these insurance companies that have hiked the rates are financially benefiting from this a little more than expected, I would like to think more players will enter the game, and that will benefit us, the condo owners.
Question 2, what's changing? So a few things. Where people are saying the big changes is one in the building's premium. So the insurance for the entire building that the Strata is organizing. Those premiums have gone up anywhere from like 30-40% to 300% we've seen. So that's a big thing. Obviously, the Stratas have not budgeted for this type of an increase in a premium, so they need the funds from somewhere, which is why potentially your Strata fees are going to be going up. To the water deductibles, the deductibles for claims have increased a lot as well. So in some circumstances, I've seen the water deductible go from $25K up to $250K.
And we see that all the time. Like how many times have you been in a building where someone above flooded a toilet or a sink or a tub just out of negligence, or maybe sometimes it's a washer, but or dishwashing machine, but it happens, and it does a lot of damage when it's on a 20th floor of a tower. It just keeps going down. So this is why we're in this spot. Don't flood your sinks.
Don't run your laundry and dishwasher when you're not home.
Yes.
And then because of the premiums and the deductibles going up, your personal premium is going to increase as well. Not as significantly. Like I've heard from some insurance brokers that, let's say a typical Strata policy is like $600 a year. That could double.
And you're talking specifically about content and deductible insurance for the individual owner. So keep in mind when we're talking about Strata owners for insurance, oftentimes your Strata fee covers the building insurance. And if you are responsible for a flood, that now comes with a much larger deductible. And oftentimes we recommend that individual owners have content insurance for their contents, and with that comes deductible insurance. And the range, I imagine, is, you give an example of a $600 increase. I had a client mention to me a $200 increase the other day, but I imagine the range is probably, my guess is on the low end would be 200-ish to 1,000 and up for some extenuating circumstances. But aside from the increased annual insurance premium, there is a perception of sellability and value to some of these places. And is that next, Denny? Are we rolling into how this is going to affect you there?
We are. Next question. How's it going to affect owners? So this coming from someone who currently owns Strata perspective. We talked about potential for Strata fees to go up. And it's difficult to give you a range, but we'll just give some approximations. If your building premium has gone from, let's say, one case we had in New Westminster recently of a unit that we just sold. Last year, their premium was $80,000, and this year it went up to $290,000. So for a Strata, I think this Strata maybe had about 200 units in it. For that type of building, you could see a $75 to $100 a month increase in your Strata fees. Excuse me. So when you look at Greater Vancouver as a whole, and I'm going to use my HGTV knowledge here of the States. When you watch those shows, they're talking when people are purchasing into Strata, what do they call it? HOA fees instead of Strata fees. The HOA fees are often significantly more than they are throughout Greater Vancouver.
Yeah. I mean, when I go down to when I was down in Maui, I was looking at that for these 1-bedroom condos. In a place that I stayed in, there were well over $1,000 a month. And we were talking like, it was like high, it was $1,600 to $1,800 range. Mind you, they're doing a lot more work for it. They have pools and all that. But commonly we see in our, maybe that's because we go to resorts when we go traveling, but it seems like in a lot of places it's much higher down in the States. And up here, I'll just use kind of some, I don't know, historic kind of perceptions of Strata fees. We're currently in New Westminster, so let's use a typical New Westminster condo for now. There was a time period where, let's call it the 900 square foot 2-bedroom. There was a time period when I was first in the business where, if a strata fee was under $300, it would start with a 2, that was reasonable. And if it started with a 3, that seemed high. And then that evolved into $300 range being the norm, and 400 seemed kind of high. So the reality is that that's going to increase again. And that $300 range one will now be more of a $400 to $500 range a month strata fee. And maybe $600 or $700 is going to seem high. So the question is, we're in this transition period where, people still often see if a strata fee is maybe $360, $380, somewhere in that range, that seems normal. But we're going to see some instances where other buildings where we might have some sitting at that number because they haven't adjusted their insurance policy yet. And we're going to see other comparable buildings that might be at $500 or $600.
Yeah.
And, in the past, when a building has a high strata fee like that, it makes it tough to sell. So if there's a few standouts that are higher than others, it's going to be a challenge for some of them to sell, or it's going to affect the value of units in those buildings. But if it's the norm across the board and 500 a month becomes the new norm, then it's just we're in the adjustment period. And a couple of years out from now, it won't affect value, in my opinion. So it's just a matter of how evenly spread that those hikes and strata fees are going to be across of the buildings that we commonly sell. And is this going to impact older buildings much more than newer ones, towers more than low rises? That's what I'm not completely clear on.
Yeah. So I think in summary, how will it affect owners? I think you just need to adjust your yearly budget, I think, and be aware that in the next 6 months or so, if your building has not yet renewed their strata insurance, that your strata fees could potentially go up $50 to $100 a month. As well as when you renew your personal premium, be prepared for that to go up 50% or higher, up to 100%. I've seen anyway.
Yeah, absolutely.
The other thing to talk about, and you mentioned it briefly, of older buildings that haven't necessarily done very much work, or owners just keep kind of voting down, doing a repaint of the exterior, updating a roof, doing the plumbing, or just spot fixing. And there are some cases throughout Greater Vancouver right now that I know of that buildings are struggling to even find someone who is going to take on their insurance policy.
Yeah, here's what I'm a little concerned of is, from my understanding, I think these insurance companies are going to be looking at depreciation reports and the maintenance program involved with them. So one, now we have an additional incentive for stratas to get on their depreciation reports. But when, my thoughts on these reports is they're pretty conservative, and I guess maybe not conservative. They're pretty, it's engineers covering themselves,
exactly.
Right? So, you put your engineer hat, you're responsible to make a report for a building. You're going to be more conservative about the lifespan of windows and roof and siding than it may last. If the walls might be fine for 20 years, but you don't want to put your engineering license on the line for that, you might be, going by what the recommended lifespan of that is, and it could be 5 when it, oftentimes we're seeing buildings that haven't had any exterior upgrades in a long time. And by long time, I mean, let's say 20 plus years. But if they have a depreciation report, it's going to give them a very aggressive building maintenance program that is probably unrealistic for the owners to consider doing. So my fear is that these depreciation reports, or concern, is that these depreciation reports that are pretty aggressive at how to maintain these older buildings, if the owners don't follow them, that's going to affect their insurance premiums. So the balance is, what's the right balance of following these programs for some of these older buildings versus just paying the higher insurance? And that I don't have an answer for.
Well, I think the higher insurance is one thing, but what about buildings that, like 70s buildings throughout Greater Vancouver, who are stucco exterior, that have never done a rain screen, that, do a repaint once every 10 years, but probably needs to be done a little more often than that. And now strata or insurance companies are just saying no to them completely. Yeah. So that to me is the fear. One, like how it's going to affect owners. One is, yes, you may have a higher strata fee if you get in, like when you organize your renewal of insurance. But on the other hand, like you mentioned, a strata fee starting with a 5, sure, may hurt resale ability, but a building that is unable to get insurance
that
is going to
hurts
hurt resellability even more.
Yeah, absolutely. And I think that's where these, government intervention may come into play, for certain cases like this. Well, I mean, it's early days, so we'll see how that unfolds. But if you're uninsured, I have no clue how that will go down. That would be interesting. We'll probably find cases of that over the coming weeks or months.
Did you see the CBC article recently? I think I shared it in our team group. CBC had an article come out, I want to say like middle of last week, and the title was...
Last week being last week of February.
Last week of February, yeah,
2020.
The title was something along the lines of like, government intervention with Strata Insurance set up insurance task force.
Yes, I did see that, yeah.
Sounds like the Ghostbusters or something. I have no idea what the task force means, nor did they give much information in this article. Basically, what it said is they're looking at ways to help strata owners out. They don't know exactly what that's going to be, but the task force is on it.
Yeah. Another interesting scenario, I mean, you mentioned the stucco sort of leaky condo type of building. But when I think of, say, Burke Whitlam, North Road, there's a lot of these older low-rise buildings that have more value in the land that they're on than the structure that they're in.
Yeah. And
so they're getting approached by developers to get bought out for towers. Their depreciation reports of these older buildings probably recommend a lot of upgrades. And insurance companies are looking at these reports thinking, we can't maybe insure this, or insurance is going to be very expensive because you're not following your maintenance program. When the owners are thinking, well, you know what? Developers are knocking on our door. That's a good backup problem to have. Do you maintain an older low-rise when you're sitting on arguably 100% land value? There's some few strata owners there that are probably having some interesting conversations in their AGMs coming up. But I don't have.
I think that's the difficulty is deciding whether or not to do that stuff, or because I guess the negative of neglecting a building for 20 years and not doing anything, assuming that it's going to be sold to a developer to build a high rise, is for those last few years that the building is still as a 1970s low rise, you're not going to have any insurance. So something happens. What happens to the owners?
You sell to the developer. You sell on that day.
Your motivation
we had
changes.
A good run. We had a good run. I'm going to mention that this leads into, I'd say, a tip for buyers and realtors representing buyers. Looking in the insurance policy when you're representing a buyer buying into a building hasn't been, I would say, front and center for due diligence.
Let's be honest. It's been completely overlooked.
But nowadays, moving forward, it will be an important part of the due diligence process. So if you're buying into a building, it's important to know what the insurance policy is. It's important to know if it is last year's insurance policy or this year's, or when it's being renewed. And then separate from that, it's important to take that policy to your own insurer and find out what content and deductible insurance will look like.
Yeah.
So that is an additional step that we highly recommend when it comes to buying in buildings nowadays.
I think it puts a lot of responsibility on us as buyers agents to educate buyers on potential changes. A lot of buyers throughout Greater Vancouver are kind of stretching themselves to get into something a little nicer, a little newer, and in a little better location. And if they're not budgeting for an extra $100 strata fee a month, we need to help them be aware of that. If a strata hasn't renewed their insurance policy, make sure your clients are aware of what's going on with the strata insurance and that it could increase their monthly costs pretty quickly here.
Yes. And lastly, I guess from the strata corporation and seller's point of view, the more information you can have available to buyers on the insurance policy, the more sellable the units will be in your building. I mean, if there are buildings that have questionable insurance or basically on the fringe of being uninsurable, that can basically be the same as having a red flag building that's leaky, and it can get sellers stuck and homeowners stuck.
Yep.
So the sooner you give peace of mind in the world of insurance, the more sellable and I guess more free the owners will be.
Totally.
Yeah.
And I don't know the answer to this, but that's one thing we didn't chat about is in the midst of this renewal process, I know a couple buildings that I've dealt with personally in the last few months that are in this middle ground where Their last year premiums run out. They haven't found a home for their premium this year. So they're on this midterm month-to-month section. And if someone tries to sell when they don't have a full policy lined up, are lenders going to turn those deals down?
Yeah, that's a good question.
Yeah.
Yeah, very good question.
Thank you.
Possibly. Anyway, I think that's it, Denny. Anything else to add here? Or are we missing anything?
I think it might be interesting to note because we don't necessarily have or a good relationship with insurance brokers. If there's people out there that are insurance brokers and deal with Strata Insurance, reach out to us. We'd love to connect to get some more information on this stuff. And
bring you on the show.
Bring you on the show and potentially a good referral source because we don't necessarily have someone that is super knowledgeable that we love.
That's a good close.
Thank you.
Thanks, everyone.